Okay, everyone say hi to Isabel. Okay, we look very far, but she's actually just like right over there. So.
But we are socially distant.
But we are socially distanced. We can do like a nice like hike like that actually.
And
Okay,
also,
Also,
it's not
voice is having a
reciprocated, so
lag
it's
as we
okay.
have a conversation.
Okay, so Isabel, she issues warrants at Kenanga Investment Bank. Can you quickly introduce
Um,
yourself, Isabel?
Well, from a personal finance perspective, I was a warrants trader at a different bank before. I took a break to do my master's and I came back to Kenanga as an issuer for structured warrants, where I specialized in a variety of retail equity derivative products. But warrants, they're my favorite baby. They have a special place in my heart because that's the one that, you just have your favorite child. So that's warrants.
Okay, let's go a little bit into this baby of yours and see whether this kid is something that all of us can adopt tonight. Sorry. Uh, okay. Okay, so I asked this to Isabel earlier, but I just want to ask this again. I am personally I'm personally a lazy investor. I like passive stuff. I like saving money. I like earning money and then investing the difference. That's kind of my style. So, doing trading as a way to generate income is something that is very new to me. Most of you who are investors can maybe agree with me that many people who are investors are finding it to be a very good year for us. We are, a lot of things are green right now. Well, personally, for me, a lot of things, my portfolio is just like amazing. So, thank you. So, I understand that warrants is a way to leverage on and to increase your profits. So, why should I, as a lazy, as a lazy like passive investor, should choose to explore warrants, not decide on, maybe like just explore it first? Why should I do that?
The main reason people actually trade warrants is because it offers leverage. And that comes in a form of effective gearing, this term in structured warrants. So in my other talks, I won't cover it today. You can always watch the video on NagaWarrants.com or on YouTube. But there's this MESTI strategy I recommend when it comes to selecting warrants. And you would say M is for matrix, E for effective gearing, S for sensitivity, T for time, I for issuer. So this E component is the effective gearing. So let's say if underlying mother share goes up 1%, the effective gearing determines how many more times the warrants will go up. Say the effective gearing is 8 times, the warrants will go up 8 times instead of just 1%. So effective gearing is really the reason why people trade warrants. And this effective gearing, by the way, only comes into play. It gives you a kicker. It boosts your portfolio the most for lazy people like you, Suraya, when you hold it over time. 2 weeks to 3 months, that kind of duration. So that's why it's suitable for long-term or medium-term traders as compared to just scalping the market. Well, that's just for me anyway.
I did ask Isabel earlier a question about the lifestyle of a trader. When I came in, we had a couple of interviews before. We had a couple of chats before. I first met Isabel April of last year, and I still remember because I was like, oh, wow. The first thought that comes to my head, wow, woman trader. And the second one that comes out when she was doing a presentation was like, wow, her presentation is very, very good. I actually wrote a whole beginner's guide on structured warrants. It's in ringgitoringgit.com. I will leave a link behind and all of that later. But she was telling me of all the different things that separates amateur traders and professional traders. Some of you, she was sharing earlier with me about like how server speed is incredibly important, and there was this one company in the US that created like a whole new fiber optic internet thing under sea level so that they can improve their server speed by 0.03%. Is that right, Isabel? Just yell it out.
More than that. Yeah, even faster than that.
Even faster than that. So these are the length that they would go. She was also showing me the system that's called Bloomberg market, and it's a
The Bloomberg terminal.
Bloomberg terminal, which is something like a reference point. Maybe some of you who do stocks or investing and trading, you're familiar with one. What is it called? I don't invest in stocks. So this particular thing, the software, she was telling me it costs you $10,000 per year. So you can
Oh,
so, per month.
hey.
Okay, so this software costs $10,000 per month. So when I say that, when people, this kind of like investment banks, they do trading professionally as a living. That's what they do. Isabel, do you trade from the poolside or by the beach at all?
I think you've been watching too many forex advertisements.
I did. Like trading for me, like comes out from the whole like forex stuff.
So I should be having.
What's your typical day like?
Well, I have one of my helpers put on the kaftan. I walk out onto the beach. I open up the windows and I say, "Oh, the market's gonna be green today." And somebody like puts the coffee into my hand, and then I walk in, and then I just say bye. And then 10 seconds later, I make. No, it doesn't work like this in the movies. There is a lot of hard work and preparation that goes into it before you can even spot an opportunity. Some people, especially let's say this year, you got rubber gloves. There was a lot of luck component involved because it went up for a very long time. It was a run that started in February and it only ended around August. So February, March, April, May, June, July, August. That's 5, 6 months of a totally uptrending stock. Even if you bought on the fourth month and sold on the fifth, you would have made. But a lot of people didn't know how to exit. So knowing how to exit is another skill that you don't really see in movies when you're holding a mojito in your hand and having somebody massage your legs while you're on your laptop smiling at it and tapping gently. It is mostly a very different atmosphere. But, I believe everybody has their way of trading, and if that works for you, then that works for you. But it doesn't really work like that in the real world.
To proceed ahead and let Isabel share with you some things that beginners should know if you want to seriously consider warrants as part of your investment portfolio.
All right. Thank you so much, Soraya. I can't wait to hear more questions from you later and have a chat. So, a disclaimer. As you can see, structured warrants are for sophisticated retail traders. Soraya says that readers of her Ringgit Oh Ringgit blog, which I read as well, are very sophisticated and intelligent. But even though I'm not questioning your intelligence, I'm just saying that you need to prepare. You need to understand this product a bit more before you actually start investing in it. And not just jump in because everybody else is, or your neighbor or friend told you, sure, can make one, no problem. Don't listen to that. All right, so the first thing you need to do as a trader is you need to actually, or even any financial products, right? You need to question everything. You need to ask the two main questions that I think are very important. First one would be, so what? How does this piece of WhatsApp news, Telegram news, i3 news, Bloomberg Terminal news, how does this affect my portfolio and my financial goal? So before we get started, I want to hear from you guys a bit more. Today's a bit more of a casual session. Please share with me your personal finance goals. Put them in the chat. I would love to read them. It can be something like make 30% ROI every single month compounded. Or it can be a goal as invest in my stash away, dollar cost average 1,000 ringgit every single month for the next 5 years. Or it could be invest into my portfolio, 50% of my savings goes into investment portfolio and I will balance that portfolio. So if you have a personal finance goal, please put it in the chat right now. We will choose a few and we will give you a goodie bag if we are very impressed with your answer. But even if we're not, we still want to hear from you. So put it in the chat right now. Any personal financial goals that you guys have for this year, next year that you've accomplished, I do want to hear them. But as you guys type, I will power on a bit. So you must remember, how do these people make money? Issuers, bankers, fund managers, gurus, agents. That's the second question. So the first question just now was, how does this webinar on what day is today, guys? Tuesday evening at 8:45 p.m. How does this affect my portfolio and financial goals? If your financial goal is merely to reduce costs and not actually, so profit is like that on a formula, right? Profit equals revenue minus cost. So you can do either two things. So as, let's say you're an employee somewhere, what you can do to actually increase your profit is to reduce your costs, right? That's where personal finance comes in, savings, cutting coupons, trying to meal prep. A lot of these things, they come down to reducing costs, bringing it down. But revenue can only be increased by things like investing and trading. Because even though you reduce costs, no matter how much, you will reach a bottom, a floor, right? Of how much you can be saving, isn't it? Even if you save your entire income, say if you make 10K, you're saving 12 months, that is still 120,000 ringgit, right? That is the most. You can't save more than that. If you are saving 1,000 every month, you can only save 12. You can't make any more than that. But you need to increase your revenue by increasing your income, active income, or increasing your passive and active investments. So time. Time is our most precious asset. So today I'm going to give you a bit of a roadmap to save time. Useful links. You guys saw these earlier, didn't you? So warrant scanner tools. On NagaWarrants.com, these three things are on our website. At NagaWarrants.com, we've got the live matrix over there where I'll teach you the last defense strategy, the MESTI strategy, and all of this you can learn from the videos there on NagaWarrants.com. A lot of people are asking, how did you, as an issuer, what do you guys recommend? Are there any trading ideas that I can have? We saw that you recommended Supermax back in February, you recommended Inari, you recommended Public Bank, all of which have made significant ROI for our traders. Over here is our Telegram, NagaWarrants by Kananga, and you can private chat us here, NagaWarrants Issuer Team. Do join our Telegram, it is very useful. And all our trading ideas are over there as well. Let me learn about you guys a bit more. You don't need to hear all of these things. Most of these things that I'm going to share about warrants, they're available on our website, but let's make it a bit more interactive for you guys. And by the way, just now somebody mentioned Shannon Tan Stonks. Are you following FinGod on Instagram as well? Because I am. It's very funny. Having 100K in the bank before the age 25, nice. Passive income 4,000 monthly. All right, Lin Sheng Kong. Oh, I like that. Ahmad Fauzi, at least 15% per year, double investment amount in 5 years. Awesome. Stefan Low, grow trading capital 30 to 100%. Nice. But duration as well, right? We always need a time horizon for our targets. Hit my first 1 mil in 4 years. Nice, Ahmad Shuzi. Sharwin Arumugam, able to enjoy personal finance by achieving at least return 36K annually. That complements my expenses of 3K per month. Nice. Bartholomew Vun, to achieve 15% annual compound growth. I love that. Annual compound growth is different from actual, just normal growth. Learn to balance my portfolio between long-term value stocks and short-term speculative stocks and have a better ROI EPF to justify my investing, Shannon. Yeah, I think, Shannon, that's a problem I've heard from a few people as well. They actually can't tell a difference between having, in their little portfolio, the little pie charts, whether they have portfolio for something like ETFs, which is safer, say stash away, for example, and then say 40%, maybe 40% in ETFs, 40% in stocks, maybe 10% in warrants, and 10% can be your fun fund. Does that make sense? Your for fun fund, like your Genting fund. So sometimes we, as traders, we know that we are human, and we know that we have this thing. Okay, I have this problem, okay? I have this itchy finger problem every day when the market is not moving and I realize I need to go and do something. So usually I have a bunch of, it's a bad habit, but I have a bunch of snacks which I'll go to and I'll look around, pick up my phone, I'll look on Instagram for a bit when I know that I'm having my itchy finger syndrome. But a lot of retailers, they don't realize that they have this itchy finger syndrome. So a lot of them, they actually, the successful ones, even though they really want to get involved in the market, they actually put, say, 10% into a gunting fund. So the joke about a gunting fund that I have with some friends that I spoke to is that you can use that to trade all of your penny counters. Sometimes you shouldn't be investing 90% into for fun kind of trade. But a lot of people, maybe they put 1%. They buy 1,000 units of a stock when they know that they're not doing the right thing, but they just want to be a participant. You know, there are people who are like that. So if your personal finance goal sometimes is short-term speculative stocks, Shannon Tan, maybe have a separate account, 1% worth. For May, 2 accounts, Mothershare and one for Warrant to see which perform well. Excellent. I'll share a bit more about that. Wendy Kwa, minimal starting capital to invest, so Warrant very suitable to start. Yes. Money earn money. My target investing and trading minimum capital. What is the ideal time to invest in call warrants? I understand it's not suitable for long-term as a time decay. Wendy Kwa. A good time to invest in call warrants would be for however long you see your stock hitting its target price. But usually when it has a movement, we see very significant movements in our structured warrants as an ROI from a 2-week to about 2-month duration. Usually after that, there's a consolidation for a bit, but that kind of duration is very normal to make extraordinary returns. Fund. Yes, Ahmad Fawaz. Funds, Bitcoin. Well, to each their own. I'm totally fine with that. And as a trader, for me, I would know all the tools available to me. So I'll look at the market, right? So what I like to do is, all right, so here's our Telegram that we mentioned earlier. You can Google those and you can notice on 7 February, we actually spoke about the rubber gloves, Supermax, Top Glove, Kosan, Harta, when this was a trading idea that we promoted. Sorry, it's a bit blur, but you can go onto your phone on the Telegram app, look for NagaWarrants by Kananga, and you can see that over there we actually did recommend Supermax at 168, and we explained why. So we noticed there was a rounding bottom for technical analysis. You know that it is a 1-to-1, and by 28th May it was already 763, and this is not even letting Supermax go all the way up to 20 ringgit, which it did. We just wrote the ROI. Supermax at this point was 383%. The warrant was 3,638. If you want to know a bit more about how well our warrants performed, we have a Trading Tuesday coming up with our head of trading, Kenneth Teo, but that's for next Tuesday. So what I wanted to mention to you guys is that success is preparation plus opportunity plus luck. And the more that you prepare, the easier it is to spot opportunities, the luckier you get, the more your chances of success. So what is preparation? Is preparation just reading every single piece of material out there? No, it isn't. You'll get burnt out. I don't want you to get burnt out. Preparation is having the right skill, which is fundamental and technical analysis skill. Know the right tools, which is structured warrants for many cases. But like I said earlier, I was going to answer Ahmad Fawaz in his comments for Bitcoin. When you are very familiar with the markets, right? You'll be able to spot many opportunities, but you need to have an arsenal of tools ready for you to use, an arsenal of weapons, okay? You need to know what each of your weapons do, so that when the opportunity comes, you know that this market, it needs this tool. It needs a structured warrant. This market, overnight, I can take part of this action. I use Forex. I'll buy some Forex on that. This one, I want to hold for a long term. I want to buy some bonds on it. So you kind of know which tool, which weapon you use to attack the market and to knife out a profit. So for this Malaysian market, I find a really useful tool is for structured warrants, because all of these stocks, you'll notice that all of these Malaysian stocks, they all have sector rotation. After rubber gloves, it went on to, rubber gloves were in February, right? That was the trend all the way to about August. After August, it was tech. That was the next sector that came into flavor. After tech, it was the small caps and their company warrants. After that was construction and banking. And right now we're experiencing, like Suraya mentioned just now, a bit of a breather in the markets. A lot of people are taking money out of the markets. They're trying to realize some P&L. Maybe they want to buy some Christmas presents for you. Good for you. But a lot of people are just taking a breather for the next few weeks. Wendy Kwa, should we set a target in percentage before we enter if we see the TA still strong? As call warrants are not similar as investing in mother shares so that we can let it ride. I'll show you this. What is the difference between all the warrants, C1, C2, CX? Ooh, big difference. All right, these are questions that we will be answering, don't worry. So common questions that you can ask, they're all on our Kenanga YouTube channel and advanced videos on NagaWarrants.com. We answer everything there. What's the difference between an issuer, market maker, or liquidity provider? What are 3 ways issuers make money? Did issuers lose during the rubber glove rally? All these things, even corporate adjustments. What happens to my warrant in a bonus issue, stock split, rights issue, special div? The videos are all on YouTube, okay? So for a lot of beginners, this is a very daunting slide, but this is me if I actually zoomed up away from my desk and I looked at the market from 20 million miles up like an eagle soaring in the sky. So if I actually listen to the market, right? How does it work? Where do warrants actually fit into my roadmap of profitability? The big picture is that you have all of these inputs. You have courses, Khan Academy, Coursera, you have events on Bursa Marketplace, great resource, a lot of free courses there for beginners. bursamarketplace.com, news apps, CNBC, Bloomberg, BFM, radio, a lot of books on technical analysis, Japanese candlesticks, research reports, you got some gurus on Facebook, and you got some real gurus like Steve Nissan, who does candlesticks, and Joe DiNapoli, who created Fibonacci, and Robert Rea. So this is the big picture first. All of these things are absolutely meaningless if you do not have an output, right? It is kind of like a sieve. You must have all of this information flowing into the top of your, sorry, what's that word called? Chorong. Funnel. Into your funnel. Okay, thank you. A funnel, right? You got all these things flowing into the top of the funnel, all these inputs. And then the middle of your funnel, which is the sieve part, is the part where you have all of your checklists, your technical analysis checklists, which I've lovingly written for you guys over here. I wrote this about a few months ago. I wrote as Isabel's Don't Be Lazy checklist as a reminder to myself. And these are things like you need to know Dow theory, chart construction, what kinds of chart construction, major reversal, major continuation patterns, 3 gaps, 3 market orders, moving average, oscillators. It sounds like a lot, but if you actually put one chunk of reading into my checklist every week, you can cover it very fast. Let's say end of December, 4th week of December, you cover one list. 1st week of January, 2nd week of January, 3rd week of January, 4th week of January, 5th week of January. And then you already know the basics of technical analysis, which will save you a lot of money in the long term. So you add that, and you need a scanner system because a scanner system will do all of the legwork for you. So you've got SI stations where all these scanner systems, what they do is they have arrows that pop out. When 3 arrows pop up, it's a buy signal. These have little signals as well. This one has a signal as well. This is an art trading system. That's a sell signal. That's a buy signal. But all of these are useless as well unless you know the backbone or the theory that creates these technical analysis indicators. Or else you're going to be cheated by things like a bull trap or a bear trap. And these are all very common market behaviors, and greed and fear You won't be able to analyze that unless you understand technical analysis first. Then only you can use a scanner system. So, like I said, all of this is totally useless unless you have an output. And the output is having an entry price, a stop loss price, a take profit price. But to maximize your stock ROI, consider structured warrants, which has a much higher ROI using the same concept. Step 5 is recognize your mistakes, risks, ask questions. Step 6, find a solution. Like I said, if my problem is I get itchy fingers every morning, I feel like I need to trade, but actually you don't need to trade. You need to just breathe, and inaction is actually action when it comes to trading as well. Maybe you don't need to actually do anything. Your solution can be to go and make a coffee every morning and just cross your arms and look at the screen and don't overtrade, if that is your problem that you face. Or if you understand that you have a problem cutting loss, you find it very difficult to stop loss, maybe you can have trading platform that offers you a stop loss. So once you set a stop loss, it stops you out, it can't change. If you have a problem cutting loss. Many things. So a lot of people, they would wonder to themselves, hey, you know what? Maybe I missed this rubber glove rally. What happens if I already missed this once in a, people always say it's a once in a pandemic, once in a lifetime pandemic, right? That's what they were talking about. But as you can see from my charts, even 2018 offered opportunities for, this is public bank. If I bought the public bank underlying, 22, I bought at the support, technical support. I sold at the technical resistance, that's 12%. If I bought the warrants, public bank C18, but Isabel, how do I know which warrant to choose? That's the MESTI concept. 11 cents to 17 cents, that's 54%. So it's the same trade. It is noticing that the chart here, this green line is the one that I drew. It was resistance turned into support. Then you knew there was a new resistance here, so you could draw a line here. Touch it twice, then you know this is a buy signal when it breaks out. And then you sell over here. The thing is, this is a really boring trade. This is highly suitable for you, Siraya, because it is an extremely boring but very profitable trade. So you've got your support and resistance, right? $22 for the public bank support, 25 for the resistance, but if you actually traded the warrants, it will be 54%. So which one would you rather? 12% or 54%? Same trade, same press of a button, same brokerage. Which one would you rather, 12% or 54%?
54 sounds 3 times better because it's literally 3 times better.
Did you hear that? She's very funny. That's why I enjoy reading your blog. Okay, so I was just explaining that 2018 had opportunities as well. And these warrants, these structured warrants, they're very useful for very expensive stocks. Like that time, public bank was already 22 bucks. It went down to 15 this year, and now it's back up to 20. If you had traded the public bank C46 and C49 warrants, 2 thumbs. Good for you. And even 2019 had opportunities. Remember how I said success equals to preparation plus opportunity plus luck? The more you prepare, the luckier you get, the more success you have. But the thing is, did a lot of people do preparation in 2018? Not so much. If not, you realize things like this. The fundamental analysis is all of these things that I drew over here. This is my own personal chart. And every time there was an announcement, I would just note it down onto my charting software. And then this is my preparation. Right? Every single announcement that came out that I found was useful to me. The question of so what? Is this useful to my portfolio? So then, here, buy, sell, I realized that it likes to do this support and resistance from about $1 to 110. Buy, sell, buy, sell, buy, sell, buy, sell. If I had actually traded the underlying, you would have made 14%. But if you traded the warrant in this boring, stable, but consistent kind of way, it would have made 50%. Every single time. And to me, that is super sexy. You see that? even if you missed one time because you're maybe on holiday on a beach, right? There will be 4 times. 1, 2, 3, 4. You would have been able to make 50%. And that is over the duration of 12th October to say 5th March. If that isn't attractively boring, I don't know what is. But that's the way I look at it as well. I'm not saying that you have to make astronomical trades every single time and rubber glove rally your way into millionairehood. But I'm saying that sometimes a boring trade can be extremely cool. Inari as well. Earlier this year, we recommended people have a look at Inari on our Telegram chat, the one I told you just now, NagaWarrants by Kananga. And Inari is very simple. The stock made 31%, the warrants made 130. Because if you bought it at the same time, this is the same trade, okay? 260 is here. Only because you're doing something super boring, which is every time it touches the yellow, you buy it as support, you sell the resistance, you buy over here. That is it. Let's see some questions. Wendy Kwa, what do you think will be the next sector rotation? I'm not too sure yet, because right now, I don't actually have many opinions when it comes to the market, but I am very quick to react the second I see something happening. So I can wake up in the morning at 7 a.m., have a different opinion by 8, and by 9 I will already be taking action on that trading idea that I already formed in my head. So it is not who can forecast whether the Dow hits 30,000 or the KLCI hits 1600, but it is whether you actually take action on what happens. So even if I said the next sector I think is going to be consumer related or whatever it is, or even say I mentioned last week, I said AirAsia, even though it's hitting $1, people didn't do a Fibonacci retracement. They don't realize that $1 is a very strong psychological level. So AirAsia, it hit $1 and people were asking whether to enter at 97. I said, pull a Fibonacci chart onto the charts. And you will notice that it will retrace to 85.5. And true enough, it did. And then if you want to enter 85, then you enter there. You don't enter at 97 and then hold on for dear life from 97 to 85. That is buying high and selling low, isn't it? Afik Dawmi, is it on a daily chart? Yes, I do enjoy looking at daily charts first. I scroll up all the way to the longest time horizon ever since the beginning of time. If I can get the IPO price, I can, because you can just use your own charting platform. SI Station, Chart Nexus, you just pay a subscription, you can do that. Beginning of time, and then I'll start drawing all the way from the beginning of time from the dinosaurs. And then I will zoom into 1 year, then to 6 months, then to 1 month, 1 day candlesticks. And then when I want to take action, I actually zoom in all the way, like Forex, all the way into a 1 minute candlestick. And then when I buy, I like the cheapest price because I'm cheapskate, I'm from Penang. Then I'll zoom out again all the way to the 1 day candlesticks. Some stocks have a lot of warrant. How to choose? Is there a way you screen these warrants? Faisal, yes. MESTI strategy, which we will cover if we have time later. But there's a video on it, Faisal Amir on YouTube. Structured warrants versus ASO. Let's go into this one next. I did mention that a lot of people, they're very happy with the rubber glove rally because most people made money. But they're also very angry with themselves because they always ask themselves, oh, I totally missed out. Had my money parked somewhere else. Or number 2, I totally missed out. I thought it was going to come down every single time it crossed the higher mark. I thought it was going to come crashing down, but continue going up for another 20 ringgit. Or things like, I've already missed it. My life is over. I have nothing else to look forward to. And I'm totally hung up on not jumping on this rubber glove trend. What I can tell you is, don't worry about it. The market always offers opportunities. Just now I showed you the opportunities from the past, 2018 and 2019, right? Hibiscus and Public Bank. But in the future, there are plenty of others as well. Like in February, like I said, rubber gloves, tech, small caps in February, August, in November, construction and banking. And the thing is, once a new trend comes into play, let's say in January, but even though people are saying that now market is plummeting, it's a very red day, It's an excellent time. This is my equivalent of Black Friday and Singles Day. I don't buy a single thing on Singles Day or Black Friday. This is when I do my shopping. I buy stocks. So when it comes to this kind of days or this kind of season where it's a bit like, go shopping, buy something for yourself, buy some stocks. So, Jan, who knows what's going to move for now because everything is retracing at the same time, right? And we all know there's some sort of window dressing towards the end of the year. But when the next one comes around, make sure that you are familiar with the MESTI strategy so you can trade their structured warrants. Because structured warrants are issued on blue chip counters such as all the FPMKLCI stocks, fundamentally strong companies, but then your small caps not so much, not as fundamentally strong as all of the popular names which have structured warrants, which also needs to be approved by Bursa and SC. So the main thing over here was that when it comes to company warrants, people can actually consider premiums and discounts, WAWB. But for structured warrants, you're looking at the CA3C98. It's a different term. So asset classes, I don't really want to go into this because it's quite long-winded. But this is just where structured warrants sit in your menu of weapons as you're about to take on the market. So there are many different products and they all do different things. So when somebody says, is this the bestest, it is the bestest for maybe this season. Winter boots are great for winter, but they're not great when you're going to the beach in summer, right? So when there's a different season, every sector that rotates, you need to know which sector suits which product. But the easy way to not have to forecast all of these things, just keep a balanced portfolio. We can just Google a bit more on it. There are tons of resources online that can teach you how to have a balanced portfolio and the benefits of a balanced portfolio of rebalancing it once a year to make sure that your income is protected, your profitability is protected. Maybe one day I'll do a video on that. Right? It's an idea. But I'm here to talk about structured warrants, not personal finance. Structured warrants versus company warrants. Structured warrants, all the C's for calls, H for puts, company warrants are a W. And they are issued by a third-party financial entity like Macquarie, Kananga, M-Bank, Maybank, RHB, CIMB, etc. Underlying company itself, that means Excel Force, are the ones that issue this. M3 Tech issues it, Sanichi issues it by themselves. Structured warrants are an investment or trading tool. Company warrants raise capital for the company. Time horizons are different. Cash settlement, you get a check if it expires in the money, and you get physical settlement instead. But the main difference when it comes to this slide of all things, Wendy Kwa, NagaWarrants Telegram, normally they just provide corporate news. Is that a clue from your side to show what's in momentum? Not really. Previously, we did have more trading ideas, but Wendy Kwa, we think that our investors are quite clever. So most of the time, what I have is a lot of individuals, they message us on the private chat, which is NagaWarrants issuer team, and they actually ask me for my opinion on that particular stock. But they don't ask me the can buy question. That is the question I hate the most. When you ask somebody can buy without actually doing the homework, it signifies that you don't actually know what is the flavor of the market, you have no market sense. But a lot of people, they actually message us on Telegram and they say, I've done my technical analysis on this stock, and this is my fundamental analysis based on these research reports. I would just like your feedback on perhaps giving us a good warrant to capitalize on this stock. And then we'll use the MESTI strategy and then we'll recommend. So that's how it usually goes these days, Wendy, because a lot of people, they're very savvy. They don't need trading ideas from us. They take a few, maybe we offer 4 or 5, and they give us 10 instead and they want us to analyze. So you can do that. Send us something on the Telegram chat and then we'll be happy to talk about it with you if you have no trading ideas. Market maker is super important when it comes to structured warrants. Company warrants don't have a market maker. So this is the big difference between warrants that start with a C and warrants that start with a W. Warrants that start with a C, you use the MESTI strategy in the last defense. Warrants that start with a W, you can use things like premium, discount, expiry, volume. A lot of people actually ask, hey, the premiums for this warrant are very high, the discounts are very low, am I getting it at a discount? But actually that's for company warrants. Company warrants is separate from structured warrants. Company warrants, you don't actually consider things like last life matrix, right, for company warrants, or sensitivity. But you do for structured warrants. You look at effective gearing, sensitivity, time to expiry, issuer, life matrix. So it's a totally different way of trading these two. You see that? These two are totally different. So this is a quote that I find very useful as well. Don't blindly follow somebody, follow the market and try to hear what it's telling you. Because even if somebody tells you, it's too late. Alright. So this one we're going to cover a bit of detail. So how do you actually use this MESTI strategy that I've been talking about? First thing, let's go into a bit of ticks. Let's look at the S. So you'll notice on the live matrix for NagaWarrants, we actually have different colors for our matrices. Put it simply for your beginners out there, green means you can enter and exit. Red means do not enter. It's like Gandalf over there standing and saying, you shall not pass, or thou shall not pass. Okay, don't enter that. And finally, pink for puts. So put warrants. What are put warrants? Pink for puts mean that when the normal call warrant, it's like this. Underlying goes up, call warrant follows it up at a higher rate because it's effective gearing, right? But if it's a put warrant, it means that if the underlying goes down, then the structured warrant, the put warrant, goes up. The benefit is sometimes you have a position that you're holding for the long term, but say you're holding long-term dialogue stocks, say, so you think that it's going to go up long term, you believe in the management and you're going to hold it for a while. But you see a temporary resistance over there and you know that it's going to come down. A lot of people, they will consider actually buying a put warrant. So when it comes down, the put warrant goes up, they hedge their returns. And when it's gone down enough, they sell off the warrant, then it continues to go up. So they get to maximize from both sides. So the pink table actually means 791. Supermax goes down all the way to 766. But notice how the warrant's value is from 31.5 and it goes all the way up to 33. So it works in the opposite direction. It's an inverse. Sharwin Arumugam put warrant is more like an inverse ETF. Yeah. It's an inverse relationship. Call warrants are correlated. They work in the same direction as the underlying. And put warrants, they're inverse. But the reason I'm showing you this is if you find it hard to remember, black is for calls and pink is for puts. Black pink. Get it? So how many tick sensitivity is my EGC58? Alright, this is a quiz for you guys. I need a breather and I'm going to ask you a question. Whoever is the first one to get this right gets a toiletry bag. If you've already won a toiletry bag before, please give it to somebody else. But you get a free toiletry bag as you go on your holidays, as you walk from your bathroom to your living room and then back again from your long holiday, because that's the only holiday we're getting. So toiletry bag, if you can tell me how many tick sensitivity is my EGC58? Almost. The first two people that got it, actually the top of the matrix, it just covers the price. It doesn't mean that it's 1 to 2 ticks. So the actual answer is 2 ticks. I know, actually Lau Kian Hao and Bartholomew Vun, it was very close. You could have been correct. Just that you see, this part over here, it continues on, right? It'll probably be 0.190, maybe 0.185. But you are right. The one who gets it right is Leon Lim. Congratulations, Leon. Leon Lim, you notice that my EGC58, whenever it moves in 2 ticks, that means this price stays the same. 14, 14, 14 and a half, 14 and a half, 15, 15, 15 and a half, 15 and a half, 16, 16, 16 and a half, 16 and a half. So sometimes when an underlying, say my EG, okay, this is what the life matrix does. My EG is here, my EG bid, my EG ask, C58 warrant bid, C58 warrant ask. So let's say you actually bought a warrant that has very few ticks. It flips very fast. My EG moves from 145 on the bid, goes to 146. That means the warrant will actually stay at the same price. 15 and a half is same as 15 and a half, right? Understand this? And only when it goes up to 16 to 1.47 will it be correspondingly priced at 15 and a half, 15 and a half. Only when it goes up to 149, it will be 16, 16. Next one, FGVC71. Giving away another prize. Just now we got Leon Lim. Please send your details over to our private chat. And I'd love to hear your, your details as in contact details, name, IC, phone number, etc. Mailing address as well. FGVC71, how many ticks? It is very easy because I give you a hint. I color coded it gray to white zones. And the answer is 3 to 4 ticks. Ooh, what happened to my formatting over there? But the answer is 3 to 4 ticks. Super easy. 4, 4, 3, for example. The first one who got it right just now was Jaden YIT. Jaden, congratulations. Send us your details on the private chat and we'd love to send you a toiletry bag. And last one, guys, VSC12. How many ticks? It is a tricky question. It's not a trick question, but it's a tricky question. You can answer a few times if you want. Oh, nice. I spot an answer already. The answer is 2 to 6 ticks. What, Isabel? The tick sensitivity can change so much in a warrant. 1 second it was 6 and now it's 2. The answer just now, I saw somebody give us 2 to 6. 2 to 6. Ahmad Fawaz Muhammad Raji. Yeah, prize goes to you, Ahmad. So, VSC12 has 6. So what's the issue? Why do I care so much about this stupid thing? Are they ticks? Are they fleas? What are they? Isabel, get to the point. The point is, when a warrant has many ticks, okay, in the MESTI concept, it is S, stands for sensitivity. So they call it tick sensitivity, get it? MES, okay? What happens is, if you actually bought VS, so this is VS bid, VS ask, warrant bid. What warrant is this? C12. C12 on the bid, C12 on the ask. Okay, this is bid, this is ask. You know, in your trading platform, you always have a bid and ask price, right? Like a money changer. So, let's say you have VS and you actually bought VS over here. You wanted to enter here. If you entered the warrant over here, enter price is EP, and then you foresee that VS will go all the way to, say, 99 cents. VS, the bid price goes from 97, 97 and a half, 98, 98 and a half, 99, and you think you're a champion, but suddenly you realize, why isn't the VSC12 warrants moving at all? It is simply because the ticks are 6. So that means the entire time, if you never looked at a live matrix, you have never heard of a live matrix, you'll be wondering and cursing the issuer. Y is stuck at 7.5, 8, 7.5, 8, 7.5, 8, and it doesn't move the entire time. Is that not frustrating for not understanding the reason why? I think that's super frustrating, but that's why we created a live matrix. So, when it passes the $1 mark, you remember that tick sizes change for equities. $1 mark and etc. It goes from half cents, right? And then it goes to 1 cent denominations. We have 1 cent coin, we don't have a half cent coin, right? Okay. Hope you understand that concept. So same thing as just now. Somebody asked me, I think it was Wendy that asked a bit more on the ROI for... I love that you guys are still answering. Alright, I know sometimes the internet connection gives you a bit of a disadvantage, but hopefully we can ask one more question later. So just now I think Wendy Kwa was asking me this question. What's the difference if I actually bought warrants versus mother share, right? And how do I actually use the stuff that you gave me today, Isabel, this information? So let's say this is MyEG C93. MyEG had an awesome run this year. So let's say I have an entry price for MyEG over here, 12.5 cents. Now, being the cheapskate I am, I like choosing prices at the top of the matrix. That's why we call it the last defense. The last time before it actually flips from 12.5 cents to there. Right? Why would I buy it when MyEG is 187, 188 and it's 12.5 cents when I can just buy it over here at the same price? So let's say I'm aggressive, I like to buy the ask. 12.5, my target price for MyEG, let's say was 204. Right? I do my technical analysis over here. I do my technical analysis on the mother share. I don't do my technical analysis on the warrant. So maybe I did a technical analysis and I did a Fibonacci projection and I like 204 as a technical take profit price. So let's say 180, 189 if I entered for the mother share. If I target profit 204, the ROI is 7.9%. I calculated it just now for you. However, if you actually bought the warrant, correspondingly, 12.5 cents. And since we have the live matrix, you can actually see the target price correspondingly is 16 cents. 16 cents minus 12 cents divided by 12 cents. What's the answer? Yes, correct, 28%. So just from simple math like that, you can see the ROI for the mother share is 7.9%. The ROI for the warrant, if you invest in it, is 28%. Same effort. The underlying goes from 189 to 204 anyway, but the warrant goes from 12.5 cents to 16 cents. But you're a bit smarter now because now you understand the stop loss, and because you attended this marvelous session by Ringgit Oh Ringgit by Soraya, you know that a stop loss should be planted right at the bottom of the matrix, by the wall. So instead, 12.5, I say that my stop loss function is 11.5 cents. I'm willing to let it go. So 11.5, 11.5, 11.5, and I would stop loss over here. Why would I stop loss when MyEG is 184, 185? Why would I stop loss when it's 186, 187? Maybe it's the same price. I can still get 11.5 all three prices. Joshua Call, where and how can we gain access to the live matrix? It is free for all Kenanga warrants. The issuer issues it. So it is over here, NagaWarrants.com. For Macquarie, they have a live matrix. For RHB, they have a pricing table. It's not exactly live, but they try. Kenanga, we have a live matrix. So 3 issuers out of the 6 issuers have live matrices out. But ours, we were the first local issuer among all the local issuers. We issued it in January 2019, last year. Bartholomew Vun, does the live matrix be updated after Bursa close? No, because it actually follows the live pricing. The way our system works is this live matrix, it pulls data from our automated market making system. So it goes to the system at 7:23 in the morning, for example, and the pricing, it does change according to the pricing during the day. That is it. But the next morning, that table is only valid for 1 day, because the next day there is time value decay. As many of you know, it erodes at the price of your warrant very slightly in 4 decimal places, maybe something like 0.00004. And if you look at our MESTI strategy video, you'll notice that you can press a button at the end. It's called the theta button, and that's how much time value decay erodes your warrants. So no, it doesn't get updated after Bursa closes. The prices will be stagnant after Bursa closes because the underlying price has a closing price, right? Last thing I'm going to cover with you guys, because you guys are so into personal finance, as I am, is this strategy, a 60-40 strategy. So let's say you are Mr. A, okay? Mr. A is cool, calm, collected, traditional. So he buys 100,000 worth of hibiscus. Hibiscus goes from $1 buy price, sell price at 110. His ROI is 10%. His gains, the total amount is 110. Okay, don't worry about that. Mr. B, he has heard of this miraculous thing called warrants. They are brilliant. Ayyo, I'm just gonna throw everything inside. I'm not saying do that. I'm just saying as a tough person. His 100,000 hibiscus CU has a 2.83 effective gearing. He buys it at 8 cents, 125 million units, because it's 100k worth he bought, and he sold it at 10 cents. His ROI is 25%, and his returns was here, 125k he made, okay? But we all know that warrants, they are leveraged as a leverage product, and these are a double-edged sword. That means if it can go up 25%, it can easily go down 25% as well. So Isabel, how do you propose solving this problem? I want to have higher return, but I don't want higher risk. What should I do? You can consider this weighted portfolio strategy. So you understand this concept. Same guy, he invests less, right? This Mr. C. So Mr. D, he does a 60-40 weighted portfolio strategy. That means he invests 60% or so in the underlying. Let me zoom in a bit closer for you guys. 40%, for example, in the warrant for it. The warrant's gearing is 2.83, the effective gearing. $1 goes to 110. The warrant, same thing as well. 8 cents goes to 10 cents. And it is 60%. 0.6 times 10%. 0.4 times 25%. And that is how you calculate your weighted portfolio. Because the ROI will be increased by 16% on average, but only 40% instead of a 10% ROI. By putting a percentage of your portfolio into warrants, you get to jack up the entire ROI of the portfolio. Does that make sense? That wraps it up for this section. Let me know if you understand Mr. D concept, 60-40. If you understand the 60-40 concept, please press 60 into the chat so I know that you get it. If you don't understand, just press huh? And remember, thank you so much for your answer, guys. I really appreciate it. Mr. D, brilliant. I think so. Mr. B, Bartholomew is pretty brilliant too. So you just need to remember that there are many things that you can do with warrants in your portfolio, but you just need to have a trading plan. You must always, if you're saying 60-40, you stick to 60-40. If you're saying 1% is into your gunting fund, you keep to that 1%. You know, you don't go and play and move around and just let the wind blow you like a lalang left and right and center. So when we trade call warrants, better not do cost averaging. Correct. Do not dollar cost average a warrant. Because warrants, you are trying to capitalize on an uptrend, right? When a stock does an uptrend, say for example, let me draw something for you guys. Say you're trying to have a stock that is uptrending. It does this. You notice that has a range. Say this is its support, resistance. This is its support. Okay, something like that. And then you notice that it's gonna do something like this. Whatever. The thing is, you are trying to capitalize on this one, Wendy. This run. And whenever you dollar cost average, you're actually not exiting the position. You're just dollar cost averaging every single month. And you could be dollar costing at every single price, right? Let me draw this again for you. So when you dollar cost average, the idea is that every single month, like clockwork, January, February, March, April, May, June, July. And no matter where that stock is, you're gonna buy it, right? That's the idea of dollar cost averaging, yes? So that means you're just buying it whenever without even thinking. And that is very dangerous for warrants. Look at that. You're making really awful trades. You're totally missing things. So no, I don't recommend dollar cost averaging despite the longer time before expiry, but set to stop loss. Because you want to get it right. Sometimes when people dollar cost average, they don't exactly realize that they are hoping and praying. So for me, when a warrants, you get it wrong already, you don't say that you are dollar cost averaging. You just realize whether you made a mistake or you cut loss. That is it. I'd rather not dollar cost average when it comes to structured warrants. If we want to cover the MESTI, we can. I'll do a quick one. So the MESTI strategy, before we wrap up, it has 3 steps. So the MESTI strategy is an acronym that I came up with. So whenever you want to trade structured warrants, you mesti guna mesti. You know, you mesti use MESTI before you trade. And MESTI covers these 5 letters. Matrix, effective gearing, balance with sensitivity, time to expiry, and issuer. So for MESTI, first step is you actually need to conduct fundamental and technical analysis. So fundamental, you can always do what I did. For example, you write the charts, fundamental news, you can read research reports, anything you want on fundamentals. But you need to examine that stock first to see whether the stock's intrinsic value is above the current price or not. What that means is, if the stock's intrinsic value is here at $10 and its current price is at 5, would you buy it? Yeah, right. Because to you it is worth $10. I can sell to somebody at $10. But right now the market is only pricing it at $5. Cheap what? Buy what, right? But this is where technical analysis comes in. Because a stock can stay underpriced and undervalued for 20, 30 years. No problem. Does that mean you made a mistake? No. But it means that it hasn't come for that time, the stock's time to rise yet. And how do you identify when it's about to rise and break out? Technical analysis. Okay, so you need fundamental analysis to understand whether the current price is below its intrinsic price, and then you use technical analysis to determine an entry price, stop loss, and target profit, which is these 3 things. Okay, remember, like I said, your funnel, your chorong, your input must have an output, and the output is entry, target price, stop loss. Step 2 for MESTI strategy. You use MESTI to choose the right warrants for you. If you forget what on earth MESTI stands for, you message Isabel on the private Telegram channel and you ask Isabel to explain to you once more. And please watch the videos that Soraya put in the chat as well. So M stands for live matrix. The issuer should provide a live matrix. Everything in warrants is dynamic. Because a live matrix, if I just give you a screenshot of a table, it can change over time. And this time next week, that table is totally useless. So it helps you time your entry price, like I showed you guys just now, target price, stop loss price, using that last defense strategy, right? Right before it hits the top and it's about to flip, then you enter over there. And your stop loss is right at the bottomest of the bottom, against the wall. Last defense strategy, don't worry about the link. You can just see it on the link that Soraya lovingly pressed over there just now. E and S must be balanced. So high effective gearing must balance with low tick sensitivity. This is complicated. You want it to be high effective gearing, but few ticks. Remember just now I made you guys do the quiz where I showed you that when it has many ticks, it flips very slowly. So stocks, when they have very high effective gearing, for example, a half-cent warrant. So a half-cent warrant is 0.005. And a lot of people like buying 0.005 warrants because when it flips from 0.005 to 1 cent, how much do you make? Want to try?
100%.
Oh, fantastic. Pay attention. 100%. I didn't tell the answer. Very good. Okay, you get a toiletry bag, Soraya. Whoa! She just looked at me. She's so cute. She just looked at me. 100%? Yes. So warrants that have this kind of very high effective gearing, when it flips one time it is 100%, have a problem of being very, very insensitive. So maybe you have a sensitivity. Let's say it flips just now, right? We use the example that absolutely, Azza Amir, sorry Azza, Soraya stole your toiletry bag. Oh, you're terrible.
I can give.
Oh, she can give. Alex Low, 100%. Aaron Selvam, Tom and Morris. Absolutely, you guys got it right. So let's say this guy is 100% effective gearing, okay? Most of the time, because it is usually very, 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 very deep out of the money, there'll be very high ticks. So it can be something like 50 ticks to flip. Isn't that crazy? Can you imagine 50 ticks for a moment? So that means you need to imagine we go all the way here just now. Like I said, this one, right? It is 6 ticks. This is 3 ticks. This is 2, right? Can you imagine a warrant having 50 ticks where it doesn't even move at all while the underlying continues to go up? What is the purpose, right? Why would I even buy a structured warrant that has that? But a lot of people do buy those warrants without even realizing it because they go for the cheapest warrant. Notice how I never said it is cheap, MESTI, CMESTI, right? I never said I'm looking for volume. I never said there is no letter volume or turnover in my MESTI strategy. There is no VESTI strategy. There is no TESTI strategy. Oh, TESTI sounds kind of bad, doesn't it? TESTI strategy. There is no PESTI strategy where it's premium. You notice all of these things? I never mentioned them because the most important things you need to realize is these 5. Matrix, effective gearing, few ticks. Make sure that balances time to expiry and issuer. Now, time to expiry, just remember if a warrant has 6 months in its lifespan and you think that your target price can hit within the next 5 months, then you make sure that you have 1 month buffer so you can exit before the expiry date. Because you can also trade warrants that are deep out of the money, no problem. Deep out of the money means that the expiry, the exercise price, let's say is 5 ringgit for public bank. Okay, if public bank is 20 bucks. That means it's very in the money. But say you have a warrant that's public bank's exercise price is say $2. Can you still trade it? Yeah, you can. You can buy and sell it and buy and sell it as long as you don't hold it till the expiry date. You can always buy and sell to the issuer. Just now I showed you the live matrix, the bid and the ask price. That's the price that the issuer will always buy back from you. We respect our live matrix. And finally, choose a responsible issuer. Attractive, kind-hearted, quick, responsive issuer who picks up your phone calls, who is so hardworking and doesn't sometimes even has the office phone redirect to a personal mobile phone. That kind of issuer to consider, alright? Next question. Wendy Kwa, what is the max tick sensitivity we should consider? It really depends on your underlying stock. So for example, you got something like Supermax, maybe in the past few days, it has a tendency to be very volatile between, let me show you actually. So this is our website with all those tools that I mentioned. This is the Live Matrix tool, the Warrant Scanner tool to use your MESTI strategy is here. Notice how we actually tell people how to use it. But Live Matrix, you can always watch the videos over here for the beginners part and the educational videos. But let's see the Live Matrix first. Let's say Wendy's question was, how many ticks is too many ticks, right? If I'm summarizing that correctly. Wendy, I really enjoy your questions. So let's say, Wendy Kwa, what's the max ticks? You notice that Supermax for the past few days has always been going from 685 to about 710, 685 to 710, 685 to 710. So you realize to yourself, hey, you know what? It's a bit tricky because sometimes if I bought Supermax at this price, I can only break even. Let's say I bought Supermax C1I at 7 cents over here. You see that? I can only be selling it at 7.5 cents when Supermax goes from 694, which goes up all the way, because these are all the same price, the white zone is the same price, goes all the way here to say of 720. I can only make one little tick. But you realize this warrant actually has a lot of players in it because they actually put a lot of money and they like making that one safe tick. However, let's say you recognize the pattern. Supermax likes going from 694 all the way to 719, right, Wendy? Then you would consider something that is like this. But you notice that Supermax C90 has a higher price, right? 261 to 273. Notice how many times the warrant has flipped. Gray to white to gray to white to gray to white to gray to white. 264, 265, 266, 267, 268, all the way up. And you compare that with C98 as well, which starting price around there is 62 cents versus 262. So it's very subjective in order to get what you want for Wendy. Joshua Call, use MESTI to tick all boxes to buy structured warrants. Exactly, thank you. Paul May, yeah, you just use it as the MESTI is a checklist. Got M, got good E, balanced with good S, T, and I, you know? Paul May, normally market maker will pull down the mother share if market maker hold very less volume. Not exactly. What the market maker will do is we will increase the ask price. We won't actually pull down the mother share because we have no reason to do that. We have a hedging policy where you can't hold a naked position. So every issuer, they must hedge the position. And if I shove down the mother share, then that means I'm actually making myself lose money.